Hello students, today we'll begin with the 9th chapter, that is final accounts of a proprietary concern. Now students, this is a very important chapter. We are going to learn all the basic concepts of how to prepare final accounts here. Further, you'll be studying final accounts of partnership firm in your standard 12th syllabus. Plus, there will be many other chapters in your standard 12th syllabus which will be based on these concepts. Also, this will be the base for some of the accounting topics at your graduate level too. So, if you are able to understand thoroughly all the concepts here, then I'm sure your accounting journey further will be very easy. So let's first understand what is proprietary concern. Proprietary concern or sole proprietorship is business run by a single person who himself controls all the business activities. Now he is the one who invests his own money into the business, enjoys all the profits and bears all the losses. Thus, he alone is the owner, manager and decision maker of his business. So let's see how the sole proprietor maintains his books of accounts. As you know, the accounting cycle begins with business transaction. We all know what is a business transaction. Now, as soon as a business transaction takes place, it is first recorded in the primary books, that is a journal or the special journal, which are the subsidiary books. We have learned this in our 3rd chapter, journal, where we passed journal entries for the transactions which were given. Then the next step, these journal entries were posted in the ledger accounts. We have learned this in our 4th chapter, ledger, where the journal entries are posted to the respective ledger accounts. So this is how the journal entry wherein cash account was debited was written on the debit side of cash account. I'm sure you all are clear up to here, as we have learnt and already solved sums on journal and ledger. Now this process is carried out for the whole year, wherein transactions take place and the recording is done in journal and then posted to ledger. Then at the end of the year, we close all the ledger accounts and find out the closing balance. So here in this case, where cash account is given, we close this cash account and then we find out the balancing figure, that is 1,40,000. Further, with the help of these ledger balances, a statement is prepared where all debit balances and credit balances are written separately. Now this statement is called as trial balance. After finding out all the closing balance of ledger account, whichever accounts are having debit balances, they are written in the debit balance column, and whichever accounts are having credit balances, they are written on the credit balance column. So now here cash account is having a debit balance. So this debit balance of 1,40,000 will be written on the debit balance side of trial balance, on the left hand side column of the trial balance. Thus, trial balance is a statement of all the debit and the credit balances of ledger accounts. And with the help of this trial balance, we'll be preparing our final accounts. Final accounts of proprietary concern. What is the importance of final accounts? It shows true and correct financial position of the business on a particular date. It gives us the operating result, that is a profit or loss for the year. It serves as record and helps in taking financial decisions It also helps in calculating the amount of tax payable to the government. Transparency is possible as it helps to avoid cheating and fraud. And preparing final accounts is mandatory as per the law. So how to prepare final accounts? Final accounts is a set of trading account, profit and loss account, and balance sheet. We'll study in details each of these now.